Hello, I'm Richard Murphy, and I want to talk about a subject I've written about for many years, which is what I call the fundamental pension contract. Now, most people don't understand pensions very well, and I'm going to keep the explanation in this video as brief and clear as I can. But what most people think a pension is the process of putting money aside into a savings account from which they will one day draw money to live upon in their retirement. Now that's a bit of a simplification because the process could be managed by their employer, it could be managed by themselves, and there are tax incentives around it. But in essence, all a pension is a savings account, very often backed by the purchase of either shares or government bonds or properties, usually on a collective basis. Now, my argument is that that model works if only a limited number of people use it. And of course, that's what did happen for a very long time. For most people in the UK, until the 1970s and 1980s, pensions were pretty rare. Most employers didn't provide them. If they did, they only provided them to their what were effectively their management and higher grade staff. They rarely provided them to anyone else, even in the public sector. But that began to change. Mass offer of pensions became the normal arrangement. Large numbers of companies offer what were called guaranteed final pension arrangements, which meant you got a proportion of your salary for the rest of your life at the time of retirement. And because of substantially rising stock market valuations and growth during the course of the 1970s and 80s, it was believed that this was possible. That's no longer the case. What's been very clear for many years now is that there is insufficient growth in the stock market, there is insufficient growth in the economy as a whole to fulfill those offers. So savings have gone back into pension schemes as literally savings arrangements. No guarantees, no outcomes put on the table as a proportion of salary, just an offer of a savings opportunity, but still in the same sorts of mechanisms, in shares, in government bonds, in property. Anyone can buy into this arrangement. But there's a problem. The assumption is that when you get to retirement age, or well beyond, you will be able to sell the shares that you bought in your savings scheme, or the government bonds that you bought in your savings scheme, or the property that you bought in your savings scheme, at the price you pay for it or more, having earned an income in the meantime. And my simple point is, there is no such guarantee. And the markets prove it, of course. We are seeing at the moment a massive change in the perception of value of office space in the UK because of coronavirus. It's not clear that people are going to go back to work once COVID-19 is over. And it's not clear that the amount of office space that has been so heavily invested in by pension funds is actually going to be required anymore. In which case, one of the assets which underpins those savings arrangements for pensions may no longer have the worth that people expected. And the same could also be true of companies, for example, when they face up to the reality of the demand to be net zero carbon and find they can't meet it and discover they no longer are viable. So there is a fundamental problem in this financial savings mechanism to provide pensions, which in my opinion makes it inherently dangerous and liable to collapse at enormous social cost if people find as their old age progresses that they literally can't afford to live. The reality is that this financially based pension contract is a sham. It presumes an ever-expanding market for financial services, and there isn't one. It is in effect what's called a Ponzi scheme. It relies upon more and more people joining the scheme to increase the value of the assets because demand for the purchase of financial products exceeds the supply, and therefore the price goes up and everybody feels better off until suddenly one day it's suddenly appreciated that the market won't expand anymore, at which point it all falls over. Am I expecting it all to fall over yet? No. Do I think it could? Yes, if we don't take action. And the action is to recognise that there really is something else which we should consider with regard to pensions, and that is this fundamental pension contract that I mentioned earlier. The fundamental pension contract is something that has gone on since, well, basically time immemorial. And it is that one generation, let's call it the older generation, will during the course of their working lifetime generate sufficient capital assets that the next generation will have the equipment that they need to live well when they come of age to work, so that as the older generation retires, the younger generation can afford to give up part of the income that they have earned to repay that older generation for the capital assets that they generated for the next generation to benefit from. What am I talking about? Well, in reality, I'm talking about the fact that my generation, I have grey hair, I'm approaching what is the official retirement age of, in my case, 66, because I'm now 63. I'm not going to retire, but let's presume I was. If my generation had fulfilled the fundamental pension contract, what we would have created is a strong, solid infrastructure in the UK to ensure that a sustainable economy was now available for the next generation to enjoy. After all, we have known that climate change has been coming our way for a long time. We have known that we needed to put in place the necessary measures to deal with this, phasing out conventional energy, bringing in sustainable energy. We would have solved the problem of battery technology. We would have put in place the flood defences that are necessary. We would have changed our transmission processes to make them local and more efficient. We would have made sure that our housing stock was well insulated already, rather than being in a desperately poor state with regard to thermal efficiency, and on and on. Because my generation knows it should have done this but hasn't, we have failed in the fundamental pension contract. We have not delivered for the next generation what they need to live off if they are going to enjoy the quality of life that we, the older generation, believe we enjoyed, without taking into consideration the external costs that we were generating and our failure to supply for the next generation on the way. So there is a pension deficit right now that has to be made good. This is the real problem that pensions now face in the UK. That the younger generation will still have to keep older people like me as I go into my dotage, and I'm hoping I do one day, and yet at the same time may still be making good that deficiency in investment that we left them as a legacy, a deficit of assets rather than a surplus of assets for them to enjoy. Can they afford to do that? Will they be able to make good that deficit? Will they want to? Will they wish to provide for a generation that has failed for them? I don't know. But right now we have to put in place the steps that will help them achieve that goal. And that means changing the way in which pension funds are invested now, from speculative financial savings instruments, which is what are being used in the form of shares, and in particular with regard to commercial property, and instead literally investing directly into the infrastructure that we have not created, but which is now our duty to provide to the next generation. Literally providing capital is the task of pension funds now. We can't continue speculating. We must focus on building. This is a reflection of the need that we have to put this fundamental pension contract into place to deliver the security that people like me will need in our old age, by being sure that a younger generation will care for us, and the security that they need that our wealth, the enormous wealth that we claim to have generated, more than £5 trillion supposedly in pension funds, has been applied for their gain as well as ours, so that our mutual dependency can be reflected through those assets. This is a massive challenge for society. And if it isn't done, if we don't reallocate the money from speculation to capital investment to build a sustainable world, we're in deep trouble. The fundamental pension contract exists for a reason, even if it has not been recognised. It is the basis of our long-term prosperity, and we now have to reflect that in our society. Thanks for watching. If you're interested in what I've been saying in this video, please subscribe. There is a button below the viewing screen. If you're interested in what I have to say on Twitter, I'm at Richard J. Murphy on that medium. If you want to look at my blog, that's taxresearch.org.uk, and we have a Facebook page as well, Richard J. Murphy. So one of those things will get you more information on what this video series is about, and I hope I'll see you again soon.